Hey, good morning, all. This is going to be a members only stream, right? So, a couple of questions from the technical question section and a couple of key points in terms of Bitcoin. Look, in terms of liquidity, right? The best tool, the best concept is actually price action itself. Right? A lot of people don't seem to understand that price action is almost an indicator in its own right. Okay, it's giving data based on the past events. It's lagging, same as most other indicators. When you sign up to a new broker or exchange, you're going to get RSI, MACD, moving averages, right? All of the things that are designed to kind of keep you losing, right? Keep you on the losing side. It's where the retail mentality comes in, right? So on that particular point, if you think of what happens for retail traders, right? The news, the indicators, all of these things are designed specifically to sucker you in for you to become the liquidity for the people who actually know what they're looking at, right? So if you think of what we've done, what we're doing in terms of the price, you can kind of answer two questions at the same time, right? Now, look, even down to our own indicators, right? These are not, if I'm trading for myself, I turn these off. I use the indicators more to show you guys what I'm looking at, right? The general idea is stochastic. Once you understand what the momentum is telling you start to see why the momentum is telling you. And then you don't need it so much, right? The same thing with fair value gaps, breaker structures, change of market structure, all of these types of things, right? Once you get to grips with what's going on, it's so much easier to keep a clean chart, right? So much, more simple. The same thing with volume, right? If you stick a volume profile on, you want to be looking at this saying, well, what's going on? Do I take the data from the high? Do I come all the way down to the low? Do I come all the way to the end? Right? And therefore, it's what data are you actually looking for, right? Now, for me, I'm looking at the chart and I'm saying clearly an external swing high is the current all-time high, and the external swing low is currently this candle here, right? Because we failed to break both of them currently. So the major reason for me in terms of using a volume profile tool would be this, right? But clear as day, we can see where the volume's at because we've had moves away from these highs, right? In terms of the moves up, so we've got a little spike, we've got a bigger spike, right? So clear as day, if you stick these things on, right, what information are you really getting that the chart didn't already tell you, right? Little spike of volume, large sell-offs, large sell-offs, large sell-offs. Oh, I wonder where the point of control is, right? So yes, I understand you're looking for, the edge, you're looking for more data, more info. See posts with, 8 indicators on, 12 indicators, 15 indicators on. You don't need one, right? So with that being said, if you look at the type of statistics as a trader that you need, right, you don't need an awful lot. You don't need 100% win rate. You don't need much greater than a 3-to-1 risk reward, and you can make a nice little living, right? And obviously scale it, compound it, go again. If we look at what the chart is currently doing from a Bitcoin point, right, and looking at what I've said about the last couple of weeks with the mechanical trading, this is nothing new, nothing different, right? It's just I've used what I've done and what I've written about in the new book, and I've just kind of tried to simplify it, right? I've spent a lot of time obviously writing, a lot of time doing, and therefore it's just made me think of an easier way to kind of break it down for you. It doesn't mean that I'm not using Wyckoff. It doesn't mean that I'm not using Elliot, right? But these things overlap. Now, I've posted a little bit about the Dow theory in the last couple of weeks as well. For me, the Dow theory is kind of the grandfather of all TA. Okay, if you look at the 6 principles, I throw 4 of them away. The real value for me is the 3 time frame or the 3 trend play, right? And therefore, we know we have an external range. We know we have an external range. Right? That's supposed to be a circle. And therefore, the primary trend that I'm looking at the moment, right, was we've had this move up and we're now seeing obviously a pullback. Right? However, if I was to put this on an Elliott wave count, I get the impression that this is a truncated type move rather than a blast through. Right? So with my bias, I guess kind of for me, and it doesn't have to be your bias, right? It doesn't have to be your sentiment or your thinking. The way that I'm breaking down the chart, right, is when someone says to me, what do you think of this guy's video? What do you think of this post? What do you think of this count? I couldn't care less. And the reason I couldn't care less is I believe in what I do in my own analysis. And you guys need to get to that point too, right? You don't need to be in an echo chamber because you've bought Bitcoin at the top and you want it to double. The way that I read Bitcoin, right, is the same as any other chart. And this is where the mechanical stuff overlaps with the Wyckoff and the Elliott. My bias is we've had a move up and we've kind of run out of puff as we get to that 69k level, right? There's a couple of key pointers, right? And, let me show you this. If we were to put a horizontal ray on the $69,000 level, right? That's close enough. As soon as we approach that level, right, we fail in this large green candle and we reject in this large red. That tells me one thing. Retail are buying, right? And the control is from that liquidity pocket. Okay. Now, we had the CEO of VanEck. We've had the chairman, I think it was the chairman of the ETF providing arm of BlackRock, basically come to the conclusion that 90% of the ETFs this year has been retail buying, right? We've had the halving, we've got a price multiplier, all of these things combined, and yet we've failed to sustain a price above the previous all-time high, right? That tells me something, right? Something isn't quite right, right? Now, we've had 15 years in terms of Bitcoin's market growth, right? We've hit a 1.45 or 1.46 trillion dollar market cap. What do you think we need to do for Bitcoin to double from 70 to 140k? We're going to need another 1.4 trillion dollars. Now, what do we have next week? We have this US election. Regardless of what side of the fence you sit on, right? Who you're voting for, who you like, who you don't, what part of the world you're in, right? Truth of the matter is, a lot of people are seeing Trump as the front runner currently. Things could change. It's a different outcome altogether, right? If the price has rallied on the assumption that Trump is winning, for me, I feel this or this was the pricing in the news. Okay. So Trump wins. All of a sudden, price drops. Democrats get back in. All of a sudden, the price drops. People were left scratching their heads. We have news. Bitcoin's going to 350k. Bitcoin's going to 1 million. Bitcoin's going to 49 million. So I ask myself the question, well, who's controlling the narrative? Why is it someone like Larry Fink on the news rather than someone like Peter Schiff, right? All of a sudden, the value that you're seeing needs to come back, and this is where the questions are not being asked. Where does the money come from? Okay, if Trump gets in, why the rally? Right? These are the kind of the types of things. Right now, if we look at the news narrative, and we've got the VanEck CEO saying Bitcoin's going to 350k. Don't forget, he's the same guy that said 90% of all the buyers of the ETF are retail. Well, what makes retail buy? Well, news like this, right? What sells news stories? Well, actually, Bitcoin's going to $1 million. Right? I want to read this article because I'm in at the top, right? This is the mindset. So when you start putting yourself into the same process and you start reading the same news, you start thinking the same logic, it's easy to understand why the assumption is that Bitcoin's going up forever. The trouble being, right, is one, where does the next $1.5 trillion come from? Let's combine these two worlds and say, right, if Trump gets in, the one thing that's happened over the last 4 years is, obviously inflation's kind of run. It's not just the last 4 years, but inflation's had this massive knock, right? I feel personally, and again as a non-American, right, I feel the last 4 years have probably been very interesting in terms of prices. Now, I mentioned in the stream yesterday, when gold goes up and the way that gold rallies, it's a sign of uncertain times, and I think it's kind of where we are, right? We've got people like Elon Musk making 30 something billion in a single day based on Tesla shares going up 20 odd percent in a single day. Again, truth of the matter is, does earnings really support or sustain that level of growth? Probably not, right? Which means we're very likely to see some kind of major corrective move across the board, stocks, commodities, including Bitcoin, right? Leverage funds obviously increasing their shorts, retail sentiment sky high, Bitcoin's going on forever, right? These are the types of things that just make it clear for me in terms of a bias. We've rejected, which means there's control, and there's control at these levels, right? So coming into the charts, right, ignoring what's happening in the news, ignoring how, why, what. The next thing is, right, we look at this candle here that had the rejection, this last buy before you sell. We didn't make a new low, right, and then we come back up, which means the power candle for me is this last one here, right, or even this one here, right, just that block as a whole. We then come up and we make a double top. The double top is a telltale sign again, right, because we tried and we failed, and we've tried and we failed, and this time we make a pretty big move down, taking out the prior low. Okay, so for me there's liquidity above it. Why did I say 72,400? Well, clearly there's liquidity above, and they know there's control above here, right? Now there's nothing stopping us having a sweep, obviously, and we could. I just don't think we need a sweep up as far as this. Okay, 80k is a lot of what people talk about. I can see a sweep at 75k as a potential price point, because there will be liquidity, right? Now to the downside, the last couple of candles that have broken the structure, right? So you have a break of structure there, is this candle. Prior to that, the last one was this candle. Right? That was quite a big one because it broke a major one here and a major one here, right? So for me, big question mark on this candle, right? However, we zoom back and we see this one. Again, similar thing. This one broke this structure, right? And we have this one that clearly broke its structure and a second structure, right? Which means there's an awful lot of liquidity all the way back down there, right? Clearly, there's buyers in this region. And again, Composite Man is going to know this. So there's clearly a big box of liquidity sitting here, right? I kind of get the impression we've got a smaller box of liquidity sitting above. And the reason I think it's a smaller box is a lot of retail are already in on the side that they want to be in on, right? So putting all this together, if I was to summarize where my bias is at the moment, right, my Elliott wave count is, we've got a truncation, whether it's a 5, whether it's a 3, I couldn't care less. The general idea is my bias isn't we're off to the moon. We have retail sentiment, who are wrong majority of the time, and they're the exit liquidity for the professionals. Retail sentiment is sky high. Bitcoin's going to 350k minimum. Bitcoin's going to 1 million probably by Q1 next year, and Bitcoin's off to 49 million by the end of the year. Right? These are the types of things that make no sense to me. Now, let's go back to the Trump scenario, the politics of this. I feel that given the last 4 years, the state that the world is currently in, right, we're on the brink of, potentially World War III. We've got a lot of other, shitty stuff happening. The price of eggs have quadrupled, all these types of things that have happened that we've seen really since COVID and the kind of the backdrop of COVID. If Trump was to get in, Trump's main agenda, right, as Make America Great Again, is going to be focused on the dollar. Now, a focus on the dollar is going to actually increase that dollar, right? Now, an increase in the dollar, think about this logically. Bitcoin trades against the dollar, gold's trading against the dollar. We're all at sky high prices across the board. If these things were to come together, the obvious solution is emphasis on the dollar. The emphasis on the dollar will have an impact in this uncertain time. Right? Now, the reason for me, I feel a lot of the stocks are going up is we've got, a hyperinflated earning ratio. We've got just, thin air, fumes pushing the markets when it comes to stocks. The fact that the stocks and the gold have kind of rallied at the same time is another telltale sign. The fact that we've rejected underneath the prior all-time high yet again on Bitcoin is another sign. All of these things combined is not pointing a very, a bullish direction. Right? So if we were to just step back, think logically, right? What do the asset managers want you to do? Right? I've talked about the last couple of streams. The biggest 10 shareholders, right, Bitcoin holders, right, are number one, Satoshi. Now, I've talked about Satoshi. I can go down this conspiracy rabbit hole. There's nothing saying Satoshi isn't a single individual. The issue being is without those coins moving, without any movement whatsoever, right? What's to say that the government hasn't got to whoever this was or is? Right? That's the first, point. Second point is what's to say the government themselves weren't behind this, and it's a smokescreen. And that's not maybe a negative. This is just, these are the types of things that I have in my mind in terms of understanding my bias. Right? Then I look at the next 9 holders, and without the conspiracy theory, the next 9 holders, they're all facilitators for retail money. BlackRock, VanEck, they've all said ETFs are all pumped by retail investment. We know that the media wants retail to be buying this because it's off to 350k. Leverage funds are the opposite. We already know that to get to, $1.4 trillion, right, in 15 years, where does the other money come from? Trump potentially putting the emphasis on the dollar rather than Bitcoin will be detrimental to Bitcoin itself. So in my bias, I'm struggling to see where I could fit a bullish narrative, right? Apart from hyperinflation, all this kind of stuff. But again, at that particular point, since 2021, part of the reason I sold my coins at 60k this time round rather than back in 2021 is I was half hoping we'd get an 80k, 100k, 120k. But I didn't see that. I saw the rejection from that kind of 60k level again, and I just thought to myself, even at 73,800, whatever the current high is, I would have made a 7.4% gain in 3 years, right? I made that yesterday on a Euro trade. That for me is where my head is currently at, right? So the reason that I'm just not interested, the reason that there's no, value in this in the grand scheme of things, is that for me right now, there's too many doubtful questions. There's regulation as another hurdle. All of these biases are not painting a pretty picture to that upside, right? Hence, I'd rather be sat on my hands out of the market. I've had my fun. Right? It's good enough for me. So in terms of putting a bias together, in terms of putting the liquidity together, I see liquidity a little to the top. I see an awful lot to the downside. I see leverage funds ultimately shorting and retail sentiment sky high. I'm seeing news in the media that we're going to 350 million, 49 million, etc., etc. None of these are good promising signs in terms of where the price is likely to fall or go to next, right? So I think as a bias, my bias is pretty much the same. I think a triple top, there's a little bit of hopium left in there. I kind of think we could get some kind of spike above the current all-time high, which would induce a lot more, buys again. Kind of feel Composite Man's likely to control that. So I think maybe 74.5, 75, maybe 77 at the push. I just got no reason to see or believe why. Nothing stopping us going to 80. I just not feeling it, in that sense. And that's where we're at. So I think from my point of view, look, this is a bit of a kind of a combo. It's a bit of a blabbering, session in that sense. But I think that's where I'm currently at in terms of the current situation. That's where I'm at, from gold, stocks, just across the board, So I think that's my take on it. All right. So anyway, I hope you enjoyed. I'll see you on the next stream. Thanks for watching, guys. Speak to you soon.